Group oversight. Implementing group-wide AML CFT programs for foreign branches and majority-owned subsidiaries. When a financial institution, FE, is part of a financial group, it is mandated to establish and implement comprehensive group-wide anti-money laundering and countering the financing of terrorism, AML CFT, programs. These programs must be consistently applied across all branches and majority-owned subsidiaries of the financial group, regardless of their location. The specific requirements for these foreign branches and subsidiaries are outlined in the AML CFT decision and mirror the obligations imposed on FIs within the state. To effectively meet these obligations, FIs, particularly those belonging to financial groups, should ensure that the AML CFT measures applied by their foreign branches and majority-owned subsidiaries are in line with the requirements of the AML CFT law and AML CFT decision. Below are the key considerations and actions that FIs should take. 1. Consistency with AML CFT requirements. Alignment with state requirements. FIs must ensure that the AML CFT measures implemented by foreign branches and subsidiaries are consistent with the state's AML CFT regulations. This includes establishing policies and procedures for the exchange and sharing of data and information necessary for customer due diligence, CDD, and MLFT risk management between foreign branches, subsidiaries, and the head office. Reporting and compliance. FIs should facilitate the reporting of suspicious transactions from their foreign operations to the relevant authorities and ensure compliance with both local and state regulations. 2. Managing legislative and regulatory restrictions. Addressing foreign regulatory challenges. In cases where foreign legislative or regulatory restrictions hinder the full implementation of AML CFT measures, FIs should introduce additional measures to manage and mitigate MLFT risks associated with their foreign operations. Examples of additional measures. Assessment of AML CFT measures. Regularly evaluate the effectiveness of the AML CFT policies, procedures, and controls in place at foreign branches and subsidiaries. Conduct gap analysis to identify discrepancies between the host country's requirements and the state's AML CFT standards. Access controls. Implement clear policies governing the access of foreign branch and subsidiary employees to the FE's IT and operational systems, including CDD and transaction processing systems. Establish controls over the access that customers and business relationships of foreign branches and subsidiaries have to the FE's products, services, and transaction processing capabilities. Information exchange and reliance. Set policies for the type of CDD and transaction-related information that FIs will accept from foreign branches and subsidiaries. Define the extent to which the FE will rely on such information, particularly in relation to customer or business relationship referrals. Service Level Agreements, SLAs. Develop SLAs that clearly outline the roles and responsibilities of all parties involved, particularly concerning CDD and record-keeping requirements for customer or business relationship referrals. Document certification protocols. Establish protocols for the certification of documents and records related to CDD measures undertaken by foreign branches and subsidiaries, ensuring consistency with the state's requirements. 3. Addressing less stringent host country requirements. Implementation of state-consistent measures. If the host country's AML CFT requirements are less stringent than those of the state, FIs must take additional steps to ensure that their foreign branches and subsidiaries adhere to the state's standards, as far as permitted by local laws and regulations. Communication with supervisory authorities. In cases where local laws prevent the full implementation of the state's AML CFT requirements, FIs should inform the relevant supervisory authorities of the situation. FIs must comply with any additional supervisory actions or requirements from the state's competent authorities, which may include terminating operations in the host country if necessary.